budget outlay of 1.3 lakh crore rupees under special assistance to states for capital investments in FY24. Former Pakistan Prime Minister Imran Khan sentenced to 10 years in prison for exposing official secrets, along with former Foreign Minister Mahmood Qureshi. Hello and welcome. You're watching The Reporter on NDTV Profit. I am Pallavi Nahata, and as always on this edition of The Reporter, we bring to you market headlines along with national and international newsmakers. But before we can move on with the show, let's see how the markets have fared today. My colleague Harsh joins us with a quick market wrap. Harsh, how did the markets fare today?
Well, after a strong day of gains yesterday, we saw a cool off, especially on the benchmarks. There you go, 1% lower on the Nifty 50. We closed very close to the day's low, 21,500, not breached though. So that's one positive. Let's quickly look at the heat map, and you'll see a slew of names largely focused with regard to earnings. When you're looking at the likes of a Bajaj Finance, Finserv also down on the back of that. Reliance Industries, after that solid gain that it posted on Monday, has declined around 2.8% today. ITC on the back of numbers has come in weaker. You're also seeing the likes of an NTPC, Ultratech and a Titan. So Titan, ITC, a lot of FMCG also seeing some amount of brunt. Among the gainers, far and few, but BPCL, Tata Motors, Grasim were the only meaningful, significant ones with posting any gains at all. Let's also quickly look at the contributories on the Nifty, and what you'll quickly see there is the likes of a Reliance was the key drag on markets today. Out of the 200, negative 0.60 contributed by Reliance. ITC, Bajaj Finance not very far behind, and L&T not very far apart from each other. 60 points contributed jointly by the three of them, and that dragged markets by around 120 points today. So those were the key contributories. Let's also quickly look at what happened with regard to the advance decline. Advance decline was strongly in favor of the advances for most part of the day, but the last half an hour belonged to the declines. The mood and the mood as well as the entire setup switched over, and it went into the favor of the declines. Let's quickly look at broader markets, and what we'll see there is the mid cap also declined around 1/3% or thereabouts as that mood switched. We did talk about advance decline. The breadth of the market got tougher, and we saw the small cap still cling on to some amount of gains around 1/10%. So both of them closed at the day's low. Last off, let's look at sectoral indices, and what we'll see there is Nifty FMCG is down 1%, but Nifty Energy stood out 1.7% down. But mind you, that one was up 5% yesterday. So that decline may not have too many complaints. With regard to some of the others, the Fin Nifty is also in focus, around 0.2% lower. So all of that in focus, but the Nifty PSU Bank continues to lead the rally 1% higher in an otherwise very, very difficult market in trade today.
Now, let's look at the big national story coming in ahead of the budget. The Parliament has revoked suspension of 11 Rajya Sabha MPs. For more details, we're joined by our colleague Vasudha Venugopal. Over to you, Vasudha.
After a stormy winter session, witnessed the suspension of several MPs, almost 146 MPs for unruly behavior and indiscipline in their conduct over the security breach that happened in the Parliament. Today, an important decision was announced by the Parliamentary Affairs Minister Prahalad Joshi. He said that the Speaker and the Rajya Sabha Chairman have looked into the matter in which 14 MPs were suspended, and their matters were sent to the Privileges Committee, and all their suspensions have been revoked, is what we hear. 11 of those MPs belong to Rajya Sabha, and their matter was sent to the Privileges Committee of the Rajya Sabha, and that decision was taken today. As far as 3 MPs were concerned who belong to the Lok Sabha, on January 12th, a meeting was convened in which the Privileges Committee had recommended that their suspensions be revoked as well, and that decision is also going to be likely very soon. So in all, the government has made it very clear that all 14 MPs whose matters of suspension had reached the Privileged Committee of the Parliament, they will all be free to attend the Parliament from tomorrow. Remember, the budget session starts from tomorrow, and Nirmala Sitharaman is all set to present the interim budget of the government, and it will provide a glimpse into the direction in which the government is thinking and the way the government has assessed the economy of the country right now. And of course, the opposition has also set its agenda very straight. Today there was an all-party meeting that was convened in which the opposition made it very clear that they want to raise the alleged misuse of investigating agencies across the country. But the government has also made it very clear that they want a smooth functioning budget session which ends on 9th of February, and we are also told that we could expect some announcements with regard to welfare of farmers.
Well, moving on, another day and another update on the Zee-Sony merger. NCLT has agreed to hear Madman Films' plea on the Zee matter in relation to the Sony merger. Now, to tell us more about this, we have my colleague Charu Singh joining in. Charu, what are you picking up on this?
As we all know that the termination of Zee-Sony merger has been the talk of the town, and now Madman Film Ventures, which is a shareholder of Zee, has approached the NCLT to get the merger implemented, and NCLT has agreed to hear the plea, and the next date of hearing is set to be March 12th. Now, what has happened in the court is that Sony submitted before the bench that the approval from the NCLT that was received on August 2023 is subject to certain conditions and can be waived off in writing or can be fulfilled also. So basically, it was not a hard and fast approvals. It does not necessarily have to be fulfilled. To this, NCLT said that it's the correct or adjudicating authority and it has the right to hear the matter, and it will be hearing the matter. Apart from this, the contentions made by Madman Film Ventures, which is a shareholder of Zee, were that since the merger has already been implemented, it is only right that, since the merger has already been approved, it is only right that it is implemented now. Apart from this, Sony also said that Madman is nothing but a proxy on behalf of Zee in all this. However, NCLT refused to address all these contentions and has agreed to hear the plea on March 12, 2024.
Well, we'll continue to bring you updates on that. But moving on, Sundara Raman Ramamurthy, MD and CEO at BSE, talks about the change in people's outlook towards BSE and the BSE's positioning in the Indian market. For a slice of that conversation, listen in.
Cash market has been there for a long period. And there, at some point of time, BSE had a significant market share. Somewhere around Jan 2023, when we joined, we found that the market share has deteriorated a lot and come to a single digit. It was hovering between 5 to 6% at that point of time. And in respect of derivatives, which is a 2 decades plus market in India, BSE had never had a steady volume or steady growth in the derivatives. It was
primarily led by LES, right? Liquidity enhancement schemes.
Correct. So it was only a liquidity enhancement scheme which was sustaining it to some levels, and once it was very clear if the LES is withdrawn, the structure may not stand the test of time. So that was the situation in respect of these two. In respect of currency, the futures were doing well and the options were not. Mutual funds, we were doing good. So this is what we inherited in Jan 2023. If you look at it, we try to make some product changes in the cash market. There you cannot create any unique position for yourself, which we can talk about later if you want. The most important area where we felt that we can position ourselves and we can make a change, we thought was derivatives, equity derivatives. So in equity derivatives, based on market feedback, we introduced, or rather reintroduced 2 contracts with slightly modified product specification. And that looks to be working well. That is one reason why the market has shown greater interest into BSE, and it's working. The most important point there is the way we are positioning ourselves is we are a complementary exchange and we are not competing with anybody.
Moving on, KPIT Tech has reported a positive set of Q3 numbers. The tech major kept its FY24 guidance intact. Tushar Deep Singh joins in. Tushar, what were the key highlights of the quarter for the company?
So KPIT, again, sort of an outlier in the IT pack. Revenue was up 4.82% quarter on quarter. Margins were up about 60 basis points to about 16.59. Net profit is up nearly 11% at 156 crore. So what we have to remember that the company has, in a way, maintained its guidance at 37% for the full year ending March 31st, up from 30 to 32%. The EBITDA margin, as what the company declared, was at 20.6%. 2% in Q3. That is up again 60 basis points sequentially and in line with its expectations for the full year. So essentially, the company is very bullish on its growth prospects for a year in which most of the IT pack has declined. Other key highlights: revenues up 4.3% in constant currency terms. EBITDA margin is 20.6% up. Deal wins stood at $189 million, which is with a healthy pipeline. So there is no pain there as what KPIT is seeing. About 600 freshers were hired. Again, very contrary to what the IT pack has done. There has been actually a net headcount decline at IT services companies. Overall, the headcount has risen to about 12,700 employees. Net cash balance is at about 829 crore, which is up 310 crore. We mentioned this because the company has declared an interim dividend of rupees 2.1. In terms of valuation, the company is still trading at about 75 to 80 times its price to earnings multiple. Still a pricey stock, though rest of the ER&D companies, where the space where KPIT functions, are catching up, specifically Tata Technologies, given its bumper listing that happened.
Thanks a lot for that, Tushar. A good set of numbers from KPIT Tech, and the stock was up about 3.5% in today's trade. But moving on, FMCG major Marico 2 reported over a 15% increase in its consolidated net profit, aided by packaged foods segment. We spoke to the MD and CEO, Shogata Gupta, who spoke about the Q3 earnings and outlined the key factors that are expected to drive growth going forward. Listen in.
I think two things. First, obviously, you're right that it has been low single digits for the third consecutive quarter. Having said that, I think this quarter was slightly different in the sense that we took a significant stock reduction in GT so that they become viable for core growth. And therefore, I think if we had not taken that correction, that growth would have been 4%, which was slightly better than last quarter. Now, I think two things. If you look at the last couple of quarters, there was significant inflation, which led to consumers, especially in rural, either downtrading into smaller brands or titrating consumption. I think inflation is largely tapering off. We also seeing most of the players, including us, taking pricing corrections. I think the government continues to invest significantly in the rural segment. So we believe that going forward, especially from Q1 next financial year, rural volumes will definitely improve. We are seeing at least the first sign, especially in our core brand Parachute, where offtakes have started picking up. And then when the offtakes pick up, obviously it is followed by secondary and primary. As you know that because of the stress, a little bit of stress even in the trade, the STRs, the stock holding at retail also had gone down by 3 to 4 days. That has also led to some of the lower volume growth. But the offtake trends, for the first time, we are seeing reasonably encouraging offtake trends, which should translate into better volume growths as we move into the next quarters.
Well, now carrying on with the IPO fervor that we saw last year, BLS e-Services IPO was fully subscribed within about 30 minutes of opening today. Saloni Kothari joins us with an update on this. Saloni?
Yes, Pallavi, as you mentioned, the IPO was fully subscribed within hours of opening. So clearly the demand is carried forward from 2023 that we saw in December and again in January as well. So talking about who actually are the investors, showing interest in the IPO is of course retail investors who kind of contributed to all the IPOs as well. So they have subscribed about 35 times, followed by non-institutional investors, which have subscribed over 21 times as of 4 p.m. on day one. The IPO is open till Thursday, February 1, and the issue is priced in the range of 129 to 135 a piece. Now, this is only a fresh issue of about rupees 391 crores, and the price to earnings ratio is about 60x, which is similar to its peer eMudra also, which is trading at about 56-57x, and the implied market cap at the upper price band is about rupees 1,200 crore. Now, talking about what exactly BLS services, do is it is a digital services providers which is involved in providing banking correspondence services, e-government services, and assisted e-services. So the business, the asset-light business model that it has, and how it has the cross-selling opportunities is what has made analysts positive on the company, and they've given Anand Rathi, for that example, has given subscribed rating to the issue for the long term, and they see that the issue is fairly priced in. So we'll have to wait till Thursday and see the overall subscription numbers is for sure how much demand it gets.
Thanks a lot for that, Saloni. Now, with that, it's time to slip into a very short break, but stay tuned because we have a lot more lined up on the other side for you. Welcome back. You're watching The Reporter on NDTV Profit. Now, with the budget just around the corner, the government has so far in FY24 released over 60,000 crore rupees as loans under the State Capex Assistance Scheme. This amounts to about 46% of the 1,30,000 crore rupee outlay. Janani Janardhanan joins us with more on this. Janani?
Thanks, Pallavi. Of course, the special assistance for capital investment to states is one of the big capex schemes wherein the centre allots a certain amount of funds to the states for spending on various capital intensive measures. Now, this is more popularly known as the 50-year loan scheme. It was announced on the back of the COVID-19 pandemic, and since then we've seen the amounts allotted for this scheme significantly rise. This year, the outlay has been 1.3 lakh crore. And it's important to understand that this scheme is usually in two parts. There is a tied portion to it, wherein states have to implement certain capital-intensive measures to get access to those funds. And then there is the untied portion, wherein states can spend it as per their discretion. Now, it's important to also see this in the sense that last year, the full allotment was not utilized. 1 lakh crore in FY23 was allotted as the outlay. However, only 76,000 crore was asked for and taken up by states. Now, the reason that was given last year was that states were not aware of utilizing these reforms or this particular scheme in time. This year, however, we're seeing that in the untied portion, which is the part that the states can use as per their own discretion, we're seeing about 90% of that is already approved. This part was 1 lakh crore and close to 91,471 crores. 91,471 crores has already been approved, and almost 50% of this has also been released to the states. The tied portion, which is also the other interesting aspect, is linked to various capital intensive measures like I had mentioned. This can be scrappage of old government vehicles, building of unity malls, building of housing for police personnel. This can also be in the form of making states more having financial reforms in these states so that they can raise their own municipal bonds, or they can have their own public financing measures. So some of these reforms were not all asked for by the states. There have not been claims for all the particular schemes, but of course we're noticing, like you had mentioned, a 46% release that has gone to the states, and of the total, if we look at it, 1.3 lakh crore, 75% has already been approved. So that's the latest that we're getting. We'll have to watch out for how much in this budget year the states will be getting under this scheme.
Thanks a lot for that, Janani. So, Finance Minister Nirmala Sitharaman is set to present the interim budget the day after tomorrow, and the focus remains on the government's path to fiscal consolidation, capex outlay, and how much the government will choose to borrow. But boosting the rural economy too could remain very high on the government's cards amid weak growth in that space. We've already seen weaker than expected monsoons in FY24. Currently, Rabi sowing too appears to remain muted. High-frequency indicators to continue to present a bit of a mixed picture, and the incoming commentary that we've been getting from companies in the ongoing earnings season also indicates that rural consumption does remain a tad weak. Economists believe that the government, though through its budget, will aim to provide rural growth a boost. Teresa John, economist at Nirmal Bang Institutional Equities, said that spending on rural and agricultural sectors is lagging, but it could see a bit of a turnaround in this budget. Likewise, Madhavi Arora, lead economist at MK, also said that she'll be watching out for some targeted support with regard to higher farm insurance and irrigation outlays and higher disbursements towards MGNREGA, the government's flagship employment program. Now, apart from the allocation for the MGNREGA, we're also closely going to be watching out for allocations for PM Kisan and the rural housing sector. With that, moving on, the Indian rupee has emerged as Asia's best performing currency in January. This comes on the back of strong foreign inflows, global bond inclusion and growth optimism, factors that have strengthened the rupee index. As per Bloomberg data, the rupee has appreciated by 0.23%. That's compared to a rise of 1.27% seen in the dollar index. Now, the uptick is mainly fueled by the government bond inclusion in the JP Morgan index. Earlier this month, Bloomberg Index Services also proposed to include Indian bonds in its emerging market local currency indices starting September. Moving on, External Affairs Minister S. Jaishankar talked about India's greater capability and how the world sees it today. He also spoke about double program of piracy and missile drones that India faced recently, hence the Navy deployed 10 ships. Listen in.
The Indian Navy has deployed 10 ships today in that region because we got a double problem. We got a piracy problem and we've got a missile drone problem. If you look, even in the last few days, we actually, one of our ships, I think INS Vishakhapatnam, went in and extinguished a fire and rescued the crew of a tanker which had taken a drone hit. Today in the morning when I came in here, I saw that the Navy had rescued, it's interesting, we rescued Pakistani and Iranian fishermen from pirates. So, I feel today that India's greater capability and our own interests and our reputation today warrant that we actually help out in difficult situations. We will not be considered a responsible country if bad things are happening around our neighborhood and we say, I got nothing to do with this. If you got nothing to do when neighborhood is in trouble, when you are in trouble, neighborhood will say the same. Believe me, people look at us much more warmly, much more friendly as a result of what we do.
And with that, we're out of time on this edition of The Reporter, but stay tuned because we'll be right back.